The last trade gains for the second week in a row led higher by IT stocks. Financials see healthy gains, but mid-caps underperform. On today's episode of Editors Roundtable, we decode how the market has fared this financial year. We put the spotlight on PSU stocks, and we tell you what to expect from IT in the fourth quarter. I am Rima, with me, Nigel and Nimesh joining in. And also, in the newsroom here with us, we've got Sandeep Tandon, founder, CIO at Quant Mutual Fund. Sandeep, always a pleasure having you here with us. So thank you very much for joining in. Guys, this is the best Friday, right? The one which leads into a long weekend.
Yeah, and not only this long weekend, April is going to be a good month because there are a couple of long weekends as well. So it's going to be a lot of absentees for sure, I guess, from our team as well. So
I think this is the last week where there is no holiday. I think for the next 3 weeks you have one or at least two holidays as well. So better times for the markets and better times in case you're planning on a holiday as well. But good to have you, Sandeep, in the studio, and thanks a lot for coming down. The last time around when we chatted, you were sounding a little bit optimistic on the markets, and that seems to be the way it's played out as well. And the risk coming in now from the US, like we had discussed last time around. Do you think that in the near term, bulk of the bad news is in the price for the Indian markets, and now the risks are more global in nature rather than the domestic factors are?
Yeah, I agree. Largely price in India, but again, I said this 2025 will not be that easy phase.
Yes.
We are in a difficult phase of bull run. So it will be challenging. You will see short-term volatility coming, and suddenly you will see big-time spike or big-time collapse also. So you have to live with that.
Right.
But largely it has been priced in. Like January we were discussing, we talked about that I'm certain that mid and small will underperform. The question was with this relative basis, they will underperform up to what extent on absolute basis, that theme has played out. Okay. So, and we have seen some amount of massive capitulative move happening in the mid and small. Okay. So I think select opportunity has already come, and that's the reason we have seen, in the beginning of March, we talked about a bottom around the corner, which has played out well. Maybe it has rallied sharply, so maybe a few more days of correction sort of thing, consolidation. Trump noise factor is going to, let's say, whether it peaks out on second or third or not, okay? So I think people are cautious, so maybe small correction, consolidation, then again, leg up on a higher side.
But March has been a good month of recovery and repair, right? The Nifty is up 6.5%. The mid-cap index is up close to about 8% this month.
correct. So as he pointed out, there was a good pullback. But Sandeep, first on April 2nd, there is a consensus that something will come and market might react negatively and all. Any view that nothing will come and maybe it will surprise the market? And why I'm saying is because especially India started doing a lot of work in terms of cutting rates, in terms of giving entry into to Teslas or for Starlink as well. In that context, do you fear that if there is nothing which negatively comes for India, market may surprise and react positively?
If it happens, answer is yes, because up to large extent is priced in, but again, nobody can predict Trump.
Sure.
Okay, so the way I think that's the reason people are slightly cautious. My personal sense is also that this sort of narrative is largely priced in, whether you talk about pharma, textile, okay, auto, we don't have any very large exposure directly except the JLR part. So the way I look at is that possibility is that largely priced in, and maybe if it comes, maybe you might see few days of correction, 2-3 days of reaction, and again move up.
So what
and a very high likely
in the volatility, what do you look to add? You'll look to add autos which you don't have, or you'll buy pharma, because again in pharma, the overall view is that it has to pass through. There can't be, there won't be much of an impact for pharma companies in India.
See, our analyst team believe that this will be the bumper quarter for pharma. A lot of people have already supplied, in the anticipation of this fear. Some, people have added inventory, which means this quarter logically should be good for pharma. But pharma as a theme, we are very convinced, whether you talk about CDMO space or generic space, if somebody talks about, let's say even they put 10%, 20%, okay, to produce this sort of generic out there in US, it's 3 to 4 times more expensive, okay, and take few years to do that, okay. So it's theoretical exercise, okay, to do that. So I think I'm remaining very constructive as long as the sector outlook is constructive. The pharma is a theme which I like to play, textile is a theme I like to play, pipes is a theme which I like to play. I'm still not clear about tech. Okay. Tech has its own global issues right now because of AI/ML sort of issues, which we right from January we are saying that issues are in the US market, and US. I was expecting a sharp correction in Nasdaq, which played out, and I think was still not over. I think this after small consolidation, one more downtick is still pending. So I will not like to touch technology. We have a virtually zero exposure in this thing. Auto has its own problem, okay? Not only from the export perspective. This quarter, if you look at the monthly numbers, you will get a sense. Massive inventory at the bigger farmhouse, okay? Margins are also expected. So I will not like to touch, again, relatively over-owned sector, where a lot of people have participated, okay, in some of these names. So we like to remain cautious. So we'll not participate even in the, maybe auto anch is an area which I look at. Let's see, wait on second and third.
All right. Well, Sandeep, the question is, how will FY26 pan out? So before we get to that, let's just focus on, what happened in the past year itself. It's been a challenging year for Indian equities in particular. In FY25, we managed to eke out some gains by the time we wound up. But the reasons that it was a challenging year was we had earnings that did slow down after a couple of years of very, very earnings growth. You had tighter monetary policy. Both from the Fed, we didn't get as many rate cuts as expected. And the RBI as well did tighten liquidity in the past year or so. Besides that, you had general elections here in India as well as in the United States. And in India, you had state elections as well. A lot of big states went to elections. So that as well slowed down the capex spend. Besides that, once President Trump has taken office, well, that fear with regard to the Trump tariffs, that's continued to weigh on sentiment. But let's run you through how the past fiscals as well were. Remember, in the past year, we did have that FY24. Well, it was a blockbuster year. This year, we managed to eke out some gains with a gain of close to around 3% or thereabouts. Though the Nifty was up only around 3%, the broader markets did a tad bit better, with the mid and the small cap indices, both of them up between 6 to around 7% or thereabouts. But how does India fare with regard to how do the global markets do? Well, actually, we underperformed. Because you take a look at the emerging market, that's the Shanghai market, that was up close to around 10%. The European markets did very, very well. That's the DAX was up close to around 22%. And the S&P 500 as well was up close to around 8%. So though we managed to pull back, we were relative underperformers in the past year. What really glittered was the precious metal space. Gold and silver up 30% apiece, massively outperforming what the headline Nifty did. But the good news for us was, in a challenging year, crude oil prices did support because that pulled back close to around 10%. And as we know, it's a tailwind for the economy as well as for the Indian markets. From the Nifty pack itself, we had a couple of new entrants. BEL as well as Trend, both of them were the new entrants into the index. Even Shriram Finance did come in. And those were the top gainers in the past fiscal. Giving them company on the upside was Bharti Airtel as well as Mahindra & Mahindra. On the flip side, though, IndusInd Bank, the rank underperformer, that was under pressure. Jio Financial has made its way into the index, but in the last few months, it's seen some bit of selling pressure. And Tata Motors, Hero MotoCorp, as well as the Adani Enterprises, they comprise of the losers from the Nifty pack. But you got the stock right, you'll make plenty of money. And just take a look at these big gainers on the screen. We're not talking about 10, 20, 30% returns. You're talking about 70 as well as 100 as well as 180% odd. So you got the stock right, well, you made plenty of money. Looking at the losers, though, it's a double-edged sword because you did have Vodafone Idea, Ola Electric, Astral, Sona BLW, and Adani Total Gas. All of them were the big losers. So to sum things up, we managed to eke out some gains. We underperformed the globe. All eyes are on FY26. Can we see a bit of a bounce back? Time will tell. Well, Sandeep, coming across to you, you mentioned a few of those sectors that you've liked, namely pipes as well. And we discussed this the last time around. Plenty of uncertainty on the metals pack as well, because that's a global-facing theme. You still like that theme, the pipes business, because President Trump is talking about drill, baby, drill. On the domestic front, you have these ductile orders as well, ductile pipe orders that have spiked up after a bit of a lull in the previous quarter. So is that theme good for more?
I think so. And in fact, I will say the larger infra theme also looks good. We have added many names, okay, in our portfolio. So if you ask me, I don't know about by end of 2025, but if you ask me for next one quarter, I think which is a theme, I think infra is one of the theme from a quarter perspective, okay? Where we have seen good amount of capitulative move happen in because of capital goods cycle unfolding. So a lot of people sold the infra names also. But they are pretty attractive since given the India infrastructure focus. And I think CapEx will come back, particularly the spending will come from the government side. So I am remaining optimistic. So select opportunity, I'm not saying across the board, but select India-centric infra name, large construction companies should also do very well.
So in the near term, infra will be the sector that you'll be tracking.
Sandeep, just to add on that infra point, while a lot of infra companies have started bagging large orders, the biggest concern for these companies were lack of money being disbursed for the work they've done for government projects. If you look at last quarter, likes of NCC, Dilip Bitcoin, they all reported very weak numbers because money was not disbursed to them on time. Is that going to be a risk, or are you seeing that actually picking out and you're seeing
easing
signs
off,
of
I will
delivery?
say, because all state elections are largely over.
Done. Right. So,
it's easing off. I'm not saying it's over,
okay,
but it's easing off.
But the counter argument to this is that a lot of state budgets are constrained, and there is a lack of intent to pay up this company. So is that going to be a risk going forward? Is that something you will be monitoring very closely in your portfolio?
So obviously some of the areas this risk is there, okay, but if you look at even Maharashtra also, the component is actually declining with some excuse whether it has started declining. The way I will read it is that you have to be very choosy. You can't generalize it and say that everything looks very good. Select large opportunity, some of the largest market cap company in this space. I don't think they have any working capital related challenges because fund raising capital, in fact, from the banking system is also very easy for them. So I think they can live with this cycle. But very small names is a challenge.
All right. And in fact, in one of your holding companies, Wellspun Corp, in their last presentation, that's in Q3, they mentioned that the past quarter was weak, but towards the end of the quarter, they were seeing those payments coming in. Just to highlight a commentary from one of those companies. But PSUs is something that you caught on early. That saw a pullback, but I believe there is some addition that you've done. Before we get to what you have to say on that, Nimesh, you have done some crunching on that. Tell us
I just looked at some numbers from the PSU sector, and it's been a roller coaster ride for PSUs in the last 6 odd months. From a high of almost index at PSE index, from a high of almost 11,800, it hit a low of almost 8,000 on the index on March 3rd. And from there, you've seen a decent pullback on all the PSU stocks as well as in the index as well, though. So the index from the March lows is up 16% as of yesterday. So a decent pullback in the PSU index, so to speak. Even for a lot of individual names, there has been a decent pullback, So I just looked at some. Before I talk about individual names, all the PSUs, the 20 components of the PSE index, all have delivered positive returns since the March 3rd lows. And even the worst performing stock, which was RVNL, even that's pulled back 10% from the recent low. So decent pullback in many of those names. The highlighted ones are the ones where there has been a decent pullback because of some announcements as well. So HAL has been one of the best performer, up 35% from the lows. HPCL is up 22%, BEL, REC, BHEL, all up between 20-22%. So decent pullback on those names. Now, what has led to this pullback or a trigger for the stocks to move up? One, a lot of stocks had corrected, so the valuations have been a bit comfortable for a lot of investors. So that was the first reason. Two, if you look at in the last fortnight, there are many PSU companies where fresh appointments of MD and CEOs have been announced. The likes of REC, the likes of IFC, a lot of those companies saw the appointments of top heads. Also for defense PSUs, there has been massive order win in the last fortnight for likes of BEL, for likes of HAL. So that's been a big trigger for them. And for even something like a BHEL, they've backed 3 large orders in the last fortnight. So that probably explains why you've seen a pullback, because the confidence is back that the government is going to issue fresh orders for the PSUs. Now, coming to specific, the defense names, especially HAL and BEL, I'm focusing on those because there are some reports as well. On HAL, the big trigger or the big overhang was the supply of GE engines. Now, that has started, which brokerages believe that it's removing the overhang on HAL, and most of the brokerages are still positive with the target price ranging from 5,800 to 6,000. So still an upside for a stock like HAL even after the pullback from recent lows. Same is the case with BEL as well. Fresh orders have come. It looks like they'll achieve their order book of 25,000 crores for this year. So that's been the trigger in BEL. For OMCs, there are a couple of triggers to watch out for. Of course, the crude is lower, but the LPG subsidy has been a big overhang. And if that comes in, you'll see a very strong quarter for a lot of brokerages have started upgrading the likes of HPBP, IOC. Now, so that's on the OMCs. I want to just leave with some holdings because Quant runs a PSU fund, and there are some top holdings including LIC, ONGC, NTPC, Concor, GAIL, SBI Life, etc. SBI Life is of course not a PSU. But Sandeep, I believe you all have further raised the exposure to the PSU stocks. Your thesis and why you're liking PSUs now?
So first of all, we rate, I think, 6 to 8% exposure in last month or so. See, we have always been bullish about PSU, okay? But only what happened last year, we have seen a euphoric move, okay? And PSU stocks beta is relatively high. So whenever you see some risk-off environment, these stocks tends to correct. And though the institutional participation is relatively low, because a lot of institutions don't like this name. People are like PSU averse, okay? But we like as a theme because whenever people have a hatred feeling, you get the maximum opportunity. So we remain very constructive on this space. We also pruned down our exposure closer to the election, June 2024. We pruned down significant exposure. But
I mean, I believe from the high of 2022, you'd come down to 6%. And now I think you're again back to 15, 18%.
Yeah, 18-20%.
18, 20%.
Okay. So I think we are pure as a house. If you look at, we call us as an unconstrained fund house. We are style agnostic, market cap agnostic. We are behavior house.
Right.
So whenever we see this extreme behavior of people have virtually given up. Okay. When we talked about, let's say in the beginning of March, okay, people were capitulated. Best of the names was given, and these are large cap names. And I said this year belongs to large and mega large cap. Some of the names we talk about ONGC or Coal India or NTP, a big list, or HP, BP. All are mega large and large cap and unique company. Whether talk about HAL or BAIL, BHEL also, even BL also. I think as a theme, we have said this decade belongs to value as a theme, and PSU qualifies that. Okay.
So in this last leg where you've added on to your PSU exposure, what have you bought?
So we have, it's a pretty diversified portfolio. We have not added up to that extent railway and defense because we felt last time there was a euphoria. So anything we have seen a massive euphoria, we tend to avoid. Okay, it's not like we are negative, but we felt opportunity was better in some of the energy names like OMC companies or the energy company, energy thing. We think crude has a potential to spike even from the current levels. So we have loaded a lot of Oil India, we have loaded ONGC purely from a macro crude call perspective. So some of these names we like, and I think it fits a well large. And these are the best part about PS, very liquid.
Very liquid.
Entry exit is not a problem,
yes,
which is the problem for the market right now. The impact cost even in the so-called A group or large cap stock, the impact cost is pretty meaningful, which is not the case in PSU. And one of the reasons we like is a liquidity aspect also. They're cheap.
Okay. Hold that thought. We'll slip into a very short break, but on the other side, we'll tell you what to expect from the IT sector in Q4. Stay tuned.